So I know in your company, you kind of, have a whole, array of different, education systems and stuff. What would you say is, obviously, in my opinion, I think that, the analysis of the deal is the most important part of the entire thing. Obviously, you can source deals to the cows come home, you can raise capital, but like you said, you can lose money if you're putting money into a deal and it's not done correctly. What, advice would you give for people that are still, learning and trying to understand the analysis of, a multifamily deal?
Oh, that's awesome. So let's break this down at a high level. In my opinion, you have to look at about 100 deals to get one.
Mm-hmm.
So let's take the 100, let's say 70 of them, we're going to do a quick analysis to figure out, it doesn't fit our criteria, whether
Mm-hmm.
it's in a flood zone or it's not the vintage we look for, or the median income in the area is too low.
Mm-hmm.
That'll allow us to not waste our time and do a deep dive on all 100 deals.
Mm-hmm.
Now we're left with 30 that sort of fit our buy box. They might be close on returns.
What are those first entry level key factors? What are some, like, what median income and what things are you looking for before you just throw it out really quickly?
Yeah, that's a great question. So the absolute first thing I do when I get a deal is I'll go to the census tract and I'll look at the median income of that area and then those around it. If it's not north of 40K, done right there, right? Like, I don't buy D-class assets in D areas. No way. I'm not skilled at that type of management.
Yeah.
The next thing I'll look for is flood zones. I prefer not to buy in a flood zone. As you know, in Florida, insurance is already hard enough.
For sure.
It only makes it a lot harder,
Only
right?
makes it harder, yeah.
From there, I'll do a quick analysis, right? And I'll figure out if I'm close on price. So at that point, I'll take their actual income, and then I'll do about a 50% expense ratio, just as a rule of thumb. And then I'll plug my debt in and kind of see where their returns are penciling out. And then I'll take the broker's pro forma to see where it goes as well. Now,
Yeah.
You and I both know the
Broker's pro forma is not always accurate.
It's trust but verify, right?
Yeah,
so you're
exactly.
saying, hey, this is the absolute best case scenario possible. And when I mean absolute best, I mean
It's like
absolute best. Yeah. So you got to take that for what it is. So at that point, if I'm close, not like half the purchase price they're asking, have the deal make sense. If I'm within 20%, I'll go in and do a deep dive analysis. So I'll verify what my taxes would be. I'll get an insurance quote. I'll plug in what it would take for me to run it, and then I'll build a rent comp matrix to verify what I believe I can get rents to at the level of renovation I plan to do.
What are you using for your rent comps? Because I know you're looking at deals in multiple areas. Do you, go off of MLS? Do you use apartments.com? Do you use, PropStream? What's your avenue for running comps?
Yeah, quick and dirty. I have CoStar that works. However, we always want to trust but verify. Again, these are large deals that we want to make sure we're absolutely confident on the numbers. So I like apartments.com, and then I try to find similar assets, so similar vintage, similar levels of rehab, and then see what they're able to get on a price per square foot basis on a, if it's a 1-1 on a 1-1. And then I know what I can do on that deal.
Interesting. Yeah, I like that strategy. I think, like you were talking about before with the broker's opinion almost of the financials, a lot of people don't realize whenever you buy an asset at a new price, it's going to get reassessed. Your taxes are going to go up. Your insurance is going to go up based on that value. A lot of brokers don't actually put that into the pro forma. They'll put at what the current tax and insurance level is and try and make you run your numbers off of that. But the expenses are going to go up no matter what whenever you buy a new asset. So I definitely would recommend people to look into that beforehand.